Well, $1 billion loss there, Shruti. Thanks very much for taking us through that. Now, in What's Brewing today, Wow Momo Foods, which is the operator of Wow Momos, Wow China and Wow Chicken, has raised $42 million or more than 350 crore rupees in a Series D funding round, which was led by Khazana, the sovereign wealth fund of Malaysia, and Oaks Asset Management. The primary infusion and secondary purchase will also provide some full or partial exits to its existing investors. The startup says this capital is going to play a crucial role in fueling its growth and expansion plans going ahead. And joining me now to discuss this is Sagar Daryani, the co-founder and CEO of Wow Momo Foods. Sagar, welcome to CNBC-TV18 and congratulations on this fundraising. So now that you've got this $49 million check, does it close your Series D funding round after what you had already raised previously? Could you give us some more details, and at what valuation have you raised these funds and what investors are exiting through the round?
Thanks, Ritu. Thanks for having me here. So basically, we've not really given a full exit to IEN. We did offer a full exit to IEN, but many of the angels decided not to exit. So that also feels good, because the angels still want to keep backing you. Net, the valuation for this round stands at 2,460 crores post money. Happy to have Khazana on board. I think it's a very like-minded investor. Last financial year, we grew literally by 85 to 90%. So we were very clear on that, and happy to, get a good investor on board, which is forward-looking. And when you talk about completion of the Series D round, I would say we are nearly there. We might raise another 50, 70 crores more if needed, but that's a board call we'll take.
Okay, so you may raise even more funds, but what sort of growth plans do you have from here on for all of your three brands in terms of revenue growth as well from all of them? What trends are you seeing?
So basically, we're very clear in our mindset that in the next 30 months, we're very clear that we want to become a 1,000 crore business with a 10% corporate EBITDA. So we are talking of doubling our revenue in the next 30 to 36 months. So the funding largely is going towards growth funding. This financial year, the first 9 months, we have been slightly negative as compared to last year. So, we've seen a negative same-store sales growth for the last couple of quarters. We don't expect a very bullish February and March, to be honest. So I'm seeing at a -3 to 4% burn for this year at a corporate EBITDA level as compared to a plus 1% last year. But I'm not very concerned about it because, we've now built a corporate team which can take care of over 2,000 stores. I think numbers are results. We're looking at levers of growth. So for us, Wow Chicken is a lever of growth. The FMCG business is a lever of growth. So Wow Momo and Wow China is making money. Wow Momo today is a 25 crore plus business for us. Wow China is a 15 crore plus business for us on a monthly basis, right? And Wow Chicken 2 is catching up and nearing 5 crores. So I think these are levers of growth, not really worried about it. I think we're looking at a long-term, larger picture, and we're very clear in 3 years' time, we want to double our revenue. We want to be that 10% EBITDA business, and maybe that could be the right time to go, public. I mean, you can't time the public markets, but maybe, we are a Make in India story.
Well, Sagar, since you brought up the public markets, let's talk about that IPO. How soon would it be? Any details you could give us?
We're targeting maybe another pre-IPO around 24 months from now, and within 24 to 36 months, maybe looking at an IPO. I mean, that's the aspirational, timeline we have in mind.
Okay, so we'll wait to hear more on that. But, how exactly are you going to use this $42 million? What are the expansion plans that you're talking about?
We would be opening another 400 stores in the next 30 months. Like I said, we're going to double revenue. We're literally going to be almost doubling our store count. We're also going to be investing in a back-end facility. So as of now, earlier at Wow Momo, we had 15 cities and 15 kitchens. Today, we have 32 cities and only 3 factories. We no more have kitchens. So we'll be opening a couple of more Momo factories, which can produce those Momos. So we want to obviously, build our backend for future growth. At the same time, more importantly, ensure that, we spend enough money in store opening. And I think a bit of losses for this year.
Okay, so even more Momos for you and doubling the store count, you said. But what about the FMCG business? Now, that's a relatively new space for you. What are the plans on that front? And, what sort of revenue is that business already generating for you? Will you need to add more products apart from ready-to-eat Momos?
The goal is now to focus on e-commerce and modern trade, with regards to FMCG. Very, very bullish on the team and where we are. As of now, we are only into frozen Momos, but very soon we're launching a kappa thukpa, a kappa khawswe, a kappa Chinese bhels. It's not just going to be steam momos frozen. You'll also get the chili momos frozen. You'll get the Jain momos for pure vegetarians. So a lot of amplifications happening in that space. So very, very bullish on the FMCG space. I think we want to grow by 100% this year. So from a 22 crore number that we're projecting for this year, I think next year we should be in the 40-45 crore range for FMCG as a whole.
Let me quickly get in the financials from you then, Sagar. Your FY23 revenue came in at 400 crores. You're targeting 500 crores plus in FY24. Are you on track to achieve that or exceed this guidance you gave us earlier? Any closer to achieving profitability? What about that?
Last year, FY23, we grew by almost 80% plus. So we grew from a 212 crores to a 400 crore, which is a whopping growth. And we were plus 1% on EBITDA. I think at a PAT level, we would be minus 12 to 15 crores, keeping interest and depreciation in mind, which is for last year. For this financial year, I think the losses would slightly go up because there's been a silent slowdown in the sector. And we've also not aggressively grown. We've decided to, open lesser number of stores. So last financial year, we actually opened 190 stores. For this financial year, by the time the year ends, we would be at an 80-85 stores that we would have opened. So 100 stores less, but it's a conscious call that we took. I don't expect the markets to improve. I think prior to election, I think whatever changes we'll see post-April, May. So I'm hoping post-elections. But very, very bullish on the India consumption story. I think for next coming financial year, we should definitely break even, which is FY 25, and I think profits should come in from FY26 is what we're looking at a tax. I mean, at a PAT level, not at an EBITDA level. EBITDA level, we've already met it last year. I think we should again meet it next year. But at a PAT level, I'm assuming another 18 to 24 months, to be honest.
Okay, profitable from FY26. Sagar, we hope that does happen. Thanks very much for your time here. All this talk about momos is making us hungry. So we're going to thank you there, and I'm going to toss it right back to Shruti in the Mumbai studio.